Okay, hi everyone, and welcome to, just throwing myself with a spelling mistake there. Hi everyone, and welcome to today's monthly webinar. My name is Jeevan Togi. So today I need to learn how to spell July, but welcome to a new webinar. So as per normal, today's session will be recorded, and you will have access to the link of that recording. Any of our previous recordings are available there on our YouTube channel. And if you do have any questions, please answer them there in the Q&A panel. We've got obviously several members from the BGL team who are there online and happy to respond with any questions, and we'll answer any questions there at the end. So welcome, Aaron. So I suppose back from holidays and I guess and the like. So Aaron, welcome.
Thank you very much, and happy new financial year to everyone. Hopefully they got through their 30 June mayhem, which I'm sure many people have experienced in the last few days. We've certainly had that ourselves, where we have a fairly significant project for each new financial year, and I'll touch on some of those a little bit later. But yeah, we have an exciting 25-26 ahead, and we'll be sharing a little bit of that detail in my update later in today's session.
Yeah, and as we know, there's a sort of a lot of media attention around Div 296, so there's a lot to come, obviously.
Yeah, it's called the calm before the storm at the moment, as the government, I think, is 22nd of July. They reconvene back in Canberra. So yes, we wait and we will see what transpires.
Okay, excellent. So if you haven't joined one of our webinars before, I'll just give a quick update about what's changed with BGL's products. Aaron will give a general, I guess, industry update, as well as any smarter SMSF changes that have come through. And then Aaron and I are happy to take any questions there at the end. Okay, let's get into it. So in terms of BGL updates, the last one we released there was on the 12th of June, 2025. We've actually got an update going out tomorrow, and one there later in July as well. So let's get into some of the changes. So first one there is around the TBC indexation. So obviously that's now increased by $100,000 up to $200,000. What actually applies automatically, which I'll show in just a second, is when you close the 2025 financial year, that'll automatically be applied against the members cap. So let's jump into Simple Fund 360. So with Simple Fund 360, obviously those details are found there on the transfer balance dashboard. So as I said, when you go through and obviously close the period, that'll be automatically taken place. So it's a matter of going through, and obviously it's taking place in terms of the maximum available cap. So as you can see for this particular member, it's actually going through and making that adjustment because cap limit is now 1.189. You can, if the members, and just a reminder, if the members do have an APRA fund or multiple funds, you can go through and add in the external TSBs as at the end of the financial year to actually go through and modify those there as well. So that actually take in consideration there the totals as we go through.
So, Jeevan, I might just add in there quickly, just to remind people that the general transfer balance cap having increased to $2 million. So this here, what Simple Fund's allowing you to do is, if you've got a client who has already got a balance against their transfer balance account, i.e. they've got a pension that started previously and they haven't used that entire amount, then the individual is only going to get a level of proportional indexation. So what Simple Fund does here is does that proportional calculation for you for that individual, so that you know that the increase that they get is not the 100,000, but is proportional to whatever the smallest remaining available cap space that they had might not be at that time. But again, the calculation that Simple Funds 360 will do will in essence give you that information, as long as you've got all of the relevant information captured, i.e. as Jeevan, you just noted about the fact that if you've got external funds, you need to make sure you've got that information captured in there as well.
Absolutely. And subsequently, obviously I was going to say that indexation also affects obviously the calculations for non-concessional caps and the bring forward as well. So it's the same on the same basis that on the contribution dashboard is making sure that obviously all the information here will be from Simple Fund 360. If there is any external contribution to an APRA fund, etc., you can enter them in here so that we do have all the information there for the calculations. Unfortunately, the ATO doesn't allow a direct download of that information into the software, something I guess the industry's been asking for quite a long time, but hopefully one day. Cool. So going through, obviously as part of the year-end processes, I covered this in the last webinar, but just a bit of a recap. Of the 2025 tax return is available here in Simple Fund 360, now obviously available for electronic lodgement. You will go to the screen. So that's going through, that is available. From 2025 and 2024, there's no changes. It's kept exactly the same. If you are a Simple Invest user, the same thing applies for trusts and things as well. So I'm not going on there, but for the trusts tax return, the 25 one has been available, and there is some slight changes there, but they're quite minimal. And same if you are using Simple Invest 360 for a company, the company tax return is now available, and there's some minor changes there, but nothing too drastic. I'm going through it. So across our platform, there is obviously the SMSF annual return, trust tax return, and the company tax return are all available there for obviously 2026, 2025, sorry. Going through, next one there is around Workpapers. So we've done two small changes there, and that's ability to carry forward attachments or URLs and the ability to insert a spreadsheet. So let's jump now into Simple Fund 360 and have a look at that. So across here in the actual Workpapers, I'm actually going to go through, and this one's 25 financial year. Let's change status there to started. A couple of different things there is around attachments. So let's go into these particular ones. So when you go through, and I'll go to there for banks. Coming here into an actual attachment. So with the actual attachment or URL, there's a little option here to mark it as permanent. So when that is selected, it will then actually carry forward that document going through. So classic example, stuff like commencing a pension or maybe a contract for purchase of real estate property, something like that you want to carry forward between all the years, but you don't want to store in the actual permanent folder. That's the use case there. We can actually mark those items permanent, and then we automatically go through and carry forward. Jumping across back to Workpapers, the other thing we've done there, and I'll maybe go to the GST one for this, for summing, is the ability now to enter in a spreadsheet. So it's just got some basic functionality to begin with that you can go through, and obviously with this one you can put in the ability to put in calc, so they have to be manually sort of helped manually inserted at this point to do through. We are going to extend the functionality of the spreadsheet functionality, so that will actually go through and have things like formulas being built, the ability to insert templates and the like. So we'll keep extending this functionality going forward there for the rest of the year. But those two things are available there right now. There's a question I saw just pop through. If you have Excel outside, can you copy and paste it into it? Yes, you can. So it's obviously there is some limitations that there's only one sheet. For things like formulas, it won't copy the formulas in, but it will copy in the values of those particular cells, but definitely can still go through and copy and paste. Also things like just formatting. So say if you had a row bolded or cell borders and things like that in Excel, I would say that the kind of display functions aren't copied through at the moment either. But definitely in terms of the actual overall sheet, yes, 100% can copy that in. Go back, sorry, to PowerPoint. Cool. So the last one I did across there is our new AI assistants. So up top here, any of the administrators of the actual firm will have access to this button. So as soon as you select a fund or entity in SimpleVest, you'll see that particular button there. Going across to, first of all, the user section. If I go into my user role, so let's look at something, for example, like an auditor user role. what you'll actually see down below, so scroll on, sorry, right down, there's an option there, AI assistant bots. So for most user roles, that's turned off by default. So if you've got a, let's say, employee user role or auditor that you'd like to give access to the AI assistants, you need to come and select this option for that particular user role in order for those users to get access. Jumping back across here into the bots. So again, these are ones that we rolled out now. So I think I covered some of these last time. So an example might be let's go with this one. So an example here is looking at contributions for the SMSF and comparing that against information there from the ATO website, as you can see, and creating a Word document. So this will go through and actually, look across the board and find those particular ones and what it wants to actually generate. It'll give you, in this case, references there from the ATO, as well as utilizing the data here from the system. If you weren't part of our last webinar as well, I was explaining here the AI assistant is using Gen AI, and it's built there within the system. So a couple of things is the data is not leaving BGL servers. It's all part of our data infrastructure, and the other part is it's all user driven. So whatever user security or user permissions you have enabled, that bots enable take on the same information. So if you don't have access to a fund, you still can't access the information. Let's say, for example, one user's got access to documents, the other one doesn't have access to documents, the other one does have access to documents. They'll obviously get different responses by the bot depending on the information that they have access to. So you can see here, very basic example, but it's gone through the contribution information. There's no contributions, and it's created a Word doc there at the top going through. So that BGL bot one there is around asking information there for the fund. I could say something like, give me a summary for the fund. And obviously what it does, the AI assistant in this case interprets what I'm asking, and now goes through and obviously provides a summary here of the SMSF, grabbing all the relevant information for, and that's where you can actually grab bits and pieces for that. So there's not every bit of information is available yet, I guess, in terms of the interface, but we're looking to improve that, and I'll show you a few things which are coming soon. A couple other ones we've done here. You can see here, I'm going to go into that one. And this one is a financial analysis bot. So this assistant here is really designed to analyze the balance sheet, operating statement, and cash flow statement. And actually, and as it says as you can see there on screen, it's analyzing that to give analysis. So it's really designed for yourselves as practitioners to add value to the conversations that you're having with your clients. So it's actually providing sort of relevant insights, commentary, bits of information. So same thing is, this will be dependent on the fund themselves. So the more data, the more investments, the more transactions that the fund has, obviously the more relevant information it'll go through and process. So as it goes through, I'll do them quickly now. So as you can see, it's actually given just a very high level there of, and this probably isn't the best data set, but very high level there of the balance sheet showing top assets, gives trends and comments, as you can see there on screen. Same thing for the operating statement. It just gives some key insights there across the board. Cash flow, very similar. And obviously within investment strategy and things, you can see the same taking place. And then just gives you overall for the whole fund. So again, that's where you can actually ask things back. But each of the assistants, what it actually does is also give down the bottom there suggestions of what the next question or prompt that you might put there is into it. So you can see here, what are the top 3 urgent actions needed for this fund? I can select that one, and it'll go and I'll select that one, and it'll go and automatically add that question in there to the chat interface. So if you're not sure what to ask first, it'll go through and ask the relevant things, so you can actually see the things that it's suggesting to actually go through and do accordingly. The last one I'll show there is around investment data. So I think this one was hopefully work there. So for example, I'm going to list all the funds. In this case, I've just selected crypto, but crypto could be show me all the funds which have property or similar going through. So the I suppose again same thing. It's going through the entire database of in this case, every single fund that you have, and returning the relevant information and questions you have. So same thing, like you could be you show me every fund that has a LBA, show me all those that have show me all of those that hold property, and then you could define what type of property, etc., and go through and doing it. This one's actually returning nothing, but in this case, I don't think there's any crypto. But again, it's explaining what it's done, and you can always go through and obviously adjust accordingly. So what you can actually get from that is an output in terms of a CSV. So you can see it's done that, but obviously there's nothing there. And then same thing, the good thing is with this is you can tailor that output. So you could say, change the CSV so that it only has these 3 fields, and it will just output that CSV file into the relevant fields that you need accordingly. So you can adjust the output to suit your needs. Coming soon. So this is more. So that was what we've got now. So I guess coming out. I think this should come out tomorrow. So we'll go soon. We've got an assistant that actually use all the current data within Simple Fund 360 and calculate what the projected Div 296 tax is, and obviously that's based on the proposed legislation. And as Aaron pointed out, we'll see what's happening towards the end of the month if there's any changes or not to that proposed legislation. But it's just really that projection and to see. We'll have also one around member balances that you'll be able to, same thing as going, okay, I want to know which of my funds might be affected by Div 296 or over a certain balance or whatever it might be. I want to identify all my clients with a balance over $1 million, just as basic as that. Sorry. So then we will have the ability for again a different assistant to do that. And the BGL assistant I showed before, that's being upgraded so that it has more access to data. So that will include pension details, investment strategy details, and some other, I think, investment type data, investment performance returns and things like that as well. So it'll have a lot more information that you can ask questions around as well. Going out also tomorrow is ability for property invoices. So that'll have that's really designed for around especially commercial properties where it's being self-managed and the trustees need to, for example, issue an invoice going through. So in that case that'll go through and accordingly I suppose issue the invoices. In a future update, be able to send the invoices out as well. And then when the payments come through, they'll be automatically matched there against the invoice. So that's something I'm releasing there. Coming in the next couple of months, we're actually upgrading our members screen, and this will actually, as part of that upgrade in terms of the dashboards, upgrade the members screen, the current members list, the current pension dashboard and contribution dashboard. So they'll be all brand new dashboards that you'll see, and information will come through into there accordingly. One thing in tomorrow's update again is we've expanded the more details panel to include, as you can see there, ATO interest amounts and fines and penalties. What we're also working on, which is being released over the next month as well, is the lodgement screen will start being able to connect to the ATO and download more data. So you'll see that come through and automatically file through. That's everything I want to cover. So I'm going to pass over to Aaron. Aaron, can you connect still? Cool.
All good.
Cool.
Excellent.
Awesome.
Thank you.
Yeah.
All right. Yeah, so thank you, Jeevan. And as I said at the very beginning, we've seen not a lot of initial activity as we move forward into the current financial year, mostly because we've had a federal election obviously go through in May, but we actually haven't seen government sit yet in Parliament. So the first sitting day is the 22nd of July, and as we've been highlighting with the Division 296 tax measures, they're kind of the main thing that we're waiting to hear from. But as many of you would have been reading, there is now a lot of discussion going on around tax reform generally, and we've got other meetings that will happen amongst those in government and those within business and so forth. So it will become quite an interesting year as we move not only through the rest of 2025, but obviously into 2026 as well. So in terms of what I wanted to cover today, the first thing is just to highlight what actually has changed for the new 2025-2026 financial year. So some of these things, Jeevan's already spoken about, the fact that we've got our general transfer balance cap that has now increased up to $2 million. So that means that if we're making contributions, non-concessionals, we need to contemplate the increase from 1.9 to 2 million for those to be able to make contributions. If you're in that cycle already of a bring forward period, again, you might have had clients that were out because of their balance being above 1.9, but it may be less than 2 million at 30 June. So therefore it gives them the opportunity to bring themselves in. We also had a discussion about that proportional indexation. So not everyone is naturally increasing to $2 million from a personal transfer balance cap point of view. So again, just be conscious of what that looks like. Use your Simple Fund 360 software to understand where your client's at from their transfer balance account and what level of indexation would apply. The other thing that's worth noting at the very top is obviously we've reached the maturity of the superannuation guarantee. So from the 1st of July, we see our final increase ultimately to now 12%. So again, that's going to have adjustments for your clients when you think about salary sacrifice arrangements and making sure that they line up to what is in essence still a $30,000 concessional contribution cap for the year. So those cap amounts from a concessional and non-concessional, as you can see at the bottom of the screen, actually still remain the same, even though we've seen increases to SG and we've seen also increases around the transfer balance cap, which are naturally linked to some of those amounts that we can put into superannuation. Also, it's worth noting that the maximum contribution base is actually dropped. Now, it's a byproduct of the fact that our superannuation guarantee rate has actually gone up, but we've got no change to that contribution cap. So again, understanding what that maximum quarterly rate is of 62,500 for the purposes of what an obligation is to be able to make payments for a particular employee at that point in time. And the other one here is in what is falling markets, we have seen the LRBA safe harbour rate drop from 9.35% for real property and 11.35% for listed shares and units down to what is now 8.95%. So this is the May 2025 published rate, the LRBA indicator rate or the RBA indicator rate for investment housing loans. So that's always worth noting, especially if you've got those related party loans that need to comply with the PCG 2016-5. You'll need to ensure that you've made that adjustment to ensure that we meet the ongoing requirements of the safe harbour. Now, if we've got clients that are paying more than that, so that you're keeping that repayment rate at a higher rate, there's actually not any major issues with that, because naturally there'll be a higher level of principal repayment off the back of the no change being made to the repayments. But if you're wanting to align that back to, in essence, what the safe harbour is there, you still need to put that into the calculation to work out that differential between P and I. And the only other thing that I wanted to flag, because Jeevan also mentioned this earlier about the proposed Division 296 tax measures, is if we do see these in the same form as what the legislation was drafted previously. So again, all the conversation that is happening in the media today is a byproduct of the previous bill that was before Parliament. And what we know from that previous bill is that there is going to be a change around the definition of an individual's total superannuation balance. In simple terms, it's linking everything to the account balance as in essence, at the end of the financial period. So there's not really a great deal of change for self-managed super funds because we always ended up with a modified transfer balance anyway, where those debits and credits on the retirement phase value were ultimately adjusted for a value at 30 June each and every year. But that is becoming defined within the total superannuation balance definition, and which is why we're seeing a lot of discussion about these defined benefit pensions and so forth, because they are going to need to actually have to have a calculation done year on year on year, arguably using a family law calculation, so that it gets incorporated into the TSB definition to work out whether someone has a liability or not for Division 296 tax purposes. So what does all that mean, Aaron? It means that it's part of the reason why we've seen this amnesty to unwind these legacy pensions, because you may actually have someone that's got a $400,000 lifetime compliant pension, and yes, there might be some asset test exemption or some other stuff there, but under these rules at 30 June each year, you're going to actually have to get an actuary to determine the value of that asset for the purposes of TSB to determine whether they're subject to Division 296 tax or not. Now, they're nowhere near that, but there'll be an obligation to have to get that done. And that's the bit that there hasn't been a lot of discussion on, but acknowledged within the industry that that's what's going to have to occur, which is why there's naturally an ability to exit these type of pensions under this 5-year amnesty that kicked off on the 7th of December 2024. And I'll touch on that in a little bit more shortly as well. So a couple of other things that are just worth noting as we move into the year. So we have clients that are obviously looking at contribution strategies. I know we've spent a lot of time only from the all the way up through to 30 June in respect to the ability to make contributions, but our unused carry forward amounts, now that we've rolled ourselves a year forward, it means that we've had another year drop off in terms of what we have available to us. So again, in terms of your planning, use Simple Fund 360 to ensure that you're matching the years that you have available to you when you're looking at the maximum contribution that you want to get for clients. The other thing that is always just worth highlighting is ensuring that the member's age may have bumped them into a new bracket for the minimum pension. So you may have had clients on 4% and they've reached age 65, so they move to 5%, or they may move to 6, 7, anyway, all the way through obviously to 14% over 95 years of age. So again, just understanding and ensuring that you have that conversation with the clients about the level of pension that they're taking. Yes, it's the start of the year, but they may be taking monthly amounts. So you might want to be making that adjustment now so that they're on the right path as they get into the financial year, and obviously the requirement before 30 June. Typically, if you leave that level of discretion naturally around how pension payments can be taken, quite easily, you can make those adjustments at the right point in time. But again, just ensuring that you're on top of these things in the communication to the client. And I come back to then this retirement legacy product amnesty. So again, we are seeing a large number of people undertake these commutations. We're kind of doing the best part of 20 a week at the moment. And just again, we've got those clients that may be doing unwinding these because of very large balances. So the old pension RBL rules were relevant in this instance, but we've also got a large cohort of clients that are doing this or have these type of pensions in place, market-linked pensions and lifetime compliant pensions, because they had either 100% asset test exemption or a 50% asset test exemption in certain circumstances. The critical thing here with the Centrelink-based clients is the legislative instrument that we have that provides the debt waiver relief, that the time period for that to be objected by virtue of these regulations being introduced into Parliament won't conclude until September of 2025. Okay, so what we're still saying to people is that those who have these type of pensions that have asset test exemption, just hold off still until we get through this period of objection where the regulations could be objected to within Parliament. And once we're through that period, then really there's an opportunity to undertake this without any fear or failure of any, like I said, debt waiver clawbacks and so forth that do operate naturally for those that are entitled to age pension. Doesn't mean that you can't do it now, but again, the best practice from an industry point of view is to say, just hold on. We spoke earlier about the LRBA adjustments. So again, just making sure you're reviewing your rates and your payments in light of falling interest rates. We're even seeing people that are thinking about refinancing, maybe from related party into external lenders, because of the fact that interest rates are now below 7 in that line of things, whereas we're up around 8.95 when we look at those related party ones. And again, be conscious of a member's total superannuation balance. These laws are intending to start from the 1st of July 2025. Okay, so the government now appears that it will be retrospectively backdated to 1 July, which is when the law was meant to come in originally. If you listen to the Treasurer is like, well, we've had all this time to plan around this, so we should know that that's when it's coming in. My argument is you only deal in LAW, not LORE, when it comes to these things. So, but the reality is your 30 June 2025 valuations, in essence, to determine total superannuation balance are really, really important. So we want to ensure that if our balances are under the $3 million, that we try and retain as best as we possibly can within the construct of the market valuation requirements with assets that the fund holds, okay? Where relevant, we can look at things like tax effect accounting and also the sale cost to incorporate these things in, because the definition of total superannuation balance is in essence linked to the termination value of a member's interest if they were to leave that fund. So understand the importance and the definition of TSB here in the context of 30 June 2025. Because if you have clients that are in this band, and Jeevan was talking about the AI before, to be able to look at these things as well, then potentially if we're above that, we want to be getting the higher end of our market valuations so that we limit the change that would happen by the time we get to 30 June 2026 as well. So there's a number of things in there that the 30 June 2025 value becomes really important for those clients that are either past there and impacted by this, or likely to be impacted by it at some point in the not too distant future as well. And then I guess just a couple of things worth noting. The ASIC fees have obviously increased from 1 July 2025. So we do see this with all the company orders. So there's a CPI adjustment, only $14 this year. So inflation's obviously dropped quite substantially off the back of some of the jumps we've seen in the past couple of years. So just note those changes there as well. And then from our point of view, we've now made a series of changes as of yesterday. So 1st of July, an updated set of governing rules that take us through to all of the, I guess, the things that are relevant from a deed point of view up until July, which naturally includes all those legacy pension things, reserve allocation rules that I spoke about. All the PDSs have been updated. We had some stuff in about Div 296, then we took it out again when the government didn't have it. We've put it back in again off the back of the likelihood of it coming through. The other thing worth noting, the ATO updated the trustee declarations in May of 2025. So again, when the deeds and when you're adding new members and things on our site, that new ATO declaration generates off the back of that, and those changes have been applied across QOPs as well. The same can be said in respect to our deed of variation. We have made some changes to the structure and the format of that document, and we've made clearer again the inside of that deed some text around the binding nature of previous decisions. So if you have BDBNs and reversionary pensions and other things that have been created and executed under previous deeds, we've just sort of drawn that out a little bit more in that document to ensure that they remain and continue to operate under the current deed as well. Our pension documents, again, no major changes around that. Obviously updated PDSs for that. But two things there. One, the Legacy Pension Hub, as I mentioned before, we're seeing a lot of requests come through for these sort of documents. We can help you both technically and then with the documents that you might need around that. And the other big one we're going to see this year is naturally around the failed pension standard. So what happens when that minimum hasn't been met? Again, we've got within our pension commutation docs the ability to choose whether that commutation is a byproduct of a member request or as a byproduct of the failed pension standards as well. And if you do any of our sort of legal documents online, you have that option to use our Smarter Legal Review that gives you that legal sign-off from our legal partner at Hill Legal as well. So, and we've got an update on our site on the 18th of July. If anyone wants to find out more about some of the stuff that we're working on, again, they can register from the link there as well.